All right, so today we're taking a deep dive into, well, smart investing, something I know is on your mind because you sent us this article, 10 mistakes to avoid when investing in the stock market. So we're going to break it down. Really, pull out the good stuff that applies to, well, to you.
And what I like about this article is it really focuses on the fundamentals, which even if you've been investing for years, sometimes you forget those basic building blocks.
Yeah, you skip over them. It's like building a house on sand instead of on, well, something solid. And the very first mistake, not doing your research. It seems kind of obvious, but what does it actually mean to understand a company's business model? How deep do we have to go?
Right, because it's more than just like, oh, they make this thing or they offer this service. It's really digging into how do they actually make money? Who are their competitors? What are the risks they face? A good test is, could you explain this company to a friend at a party and have it make sense without busting out your phone, looking at their Wikipedia page,
I love that. That's a great test. Because, and this goes right into mistake number 2, if you don't really get a company, this whole timing the market thing, it's impossible. You're basically just, looking out the window for 5 seconds, trying to guess if it's going to rain all week.
Exactly. Reacting to the headlines, not actually making, an informed decision.
Speaking of spreading your investments, this article, it hits on that classic advice. Don't put all your eggs in one basket. Diversification.
Classic for a reason. But man, it's hard though, right? Because everyone's always talking about the next big thing, like they're going to get rich quick. Hard not to get that FOMO, that fear of missing out.
Oh, it's real. Emotions are such a big part of this, and they can really trip us up. The article talks about having your plan and sticking to it, especially when the market gets crazy.
Yeah.
Which I think ties into thinking long term, because another sneaky thing, fees.
Ugh, fees.
Yeah.
Those tiny little percentages, they don't seem like much at first.
Right.
But it's like compound interest, but in reverse. Even a small difference over decades, that's thousands of dollars, potentially lost. And speaking of the long game, thinking long term, this article really emphasizes that.
Investing, it's not a sprint, right? It's a marathon, slow and steady.
Yeah, and not getting distracted by every shiny object.
Right.
The article warns about, blindly following trends. Remember that friend who always has to have the newest gadget, and then a month later, it's old news.
Oh, yeah. Always chasing that next thing.
Investing can be like that, too. You chase the hot stock, and then, whoops.
Right. And just as important as riding out those highs, not freaking out when things go down.
Exactly. Markets fluctuate. It's normal. Think of it like a roller coaster. It's got those dips and turns, but that's part of the ride. And, before we even, I don't get too excited about picking stocks or anything, the article brings us back down to earth with a really important point. Only invest what you can afford to lose.
That is huge. Investing should be building your future, not adding stress to your life right now.
100%. And once you've got those, those foundations in place, the article talks about a strategy that can really make a difference over time. Reinvesting your dividends, basically putting your earnings to work for you.
Man, this is good stuff. Really makes you think.
And it makes you think, the article focus on what not to do.
Yeah.
Which is great. Got to avoid those pitfalls. But what are those positive steps we can take today? What's going to get you started building that strong foundation so you can be a smart, informed investor? That's something that, to chew on a little bit as you continue on your investing journey.